are doing a 4-part series on hybrid mutual funds. This is the third video, and in this one we are going to address the moderate investor. We had defined the moderate investor as somebody who is willing to take a drawdown on his portfolio to the tune of about 55 or 60%. And yes, that drawdown is temporary, just to reiterate that again. Now for you, in the hybrid mutual fund space, there are 3 funds that you can look at. You can look at a balanced hybrid fund, you can look at a dynamic asset allocation fund, and you can also have a look at the equity savings fund. So let's start with the balanced hybrid fund. Just a quick recap, the balanced hybrid fund is a fund which needs to invest 40 to 60% in equity and equity related components and 40 to 60% in debt, right? There is no arbitrage allowed here. When we were analyzing these funds, what we noticed was that most of these funds were dedicated either towards retirement or towards children in a specific purpose. There are hardly about 10 to 15 funds here, and only 3 or 4 of them were above a 500 crore AUM. So what that says to me is, as a category, it's dying down, right? And what it means for you is that if you choose something in this category, then make sure that the AMC is focused onto the fund that you're picking up, right? You don't want to get into a fund which is on the side somewhere along the lines and is not in focus. Now let's get on to the equity advisory savings fund. Remember from our video 1, this is something which needs to have at least 65% in equity and equity related instruments. So does that mean it's more aggressive than the balanced hybrid fund? The answer is no. It can be, but generally it isn't. And why is that? Because that 65% is in equity and equity related components. So in that equity related components, arbitrage also comes in, right? Now go back to video 1, revise the concept of arbitrage if you need to, and tell me, does that entail more risk? And you will arrive at an answer which says no. So practically speaking, when I was speaking to these people in the equity savings fund category, I was speaking to various mutual funds. Most of them are in the region of 20 to 40%. There is one fund which stands out, and I don't want to name that fund, which has chosen not to have arbitrage positions, and therefore its equity savings fund is more aggressive than its conservative hybrid, not conservative, the balanced hybrid fund. So just when you are picking up the equity savings category, check with them that they do take arbitrage positions. Now the third fund, category of funds which will work for the moderate investor is something which we call the dynamic asset allocation fund. A quick recap, dynamic asset allocation funds do not need to have a certain specific percentage in equity or in debt as per SEBI provisions. So how do they work? They mostly work on models which are predefined. Some of them have PE and PB models. PE is price to earnings ratio, PB is price to book value. Now I'm not going to get into what PE and PB is, but it basically tells you how expensive the market is. So, right? Now if your ratios are telling you that the markets are getting expensive, what do? You bring down your equity component. Now there was a shortcoming that happened with these models. They weren't being able to catch trends. So most fund houses have buffered up their models in such a way that they're able to catch trends also. And one such name that stands out to my mind is Edelweiss Balanced Advantage Fund, which comes under this category, which is being able to catch trends. So also remember, I told you in video 2, I've done this study where I've taken data points from, let's say, 20th of January to 3rd of April, and I'm not very 100% sure of that 20th of January, but it's somewhere around there. And then I've taken from 3rd of April to 28th or 29th of September. So the first part helped me see the crash, which was on the Nifty 34%, And the second part helped me see the pullback, which on the Nifty was 39%, right? So some of the funds, dynamic asset allocation funds, which did very well in these two periods. And when I'm saying very well, I mean that they didn't crash that bad, didn't rise that high, but was somewhere in the middle. Some of the names that come to my mind are Edelweiss, DSP, L&T, Tata. So am I advising you to get into these funds? No, I'm not advising you to get into these funds. These are just my observations. So to conclude this third video, if you are a moderate investor, and I'm going to confuse you a little more, if you're a conservative moderate investor, go in for the equity savings fund. If you're a slightly more aggressive moderate investor, go in for the dynamic asset allocation fund. I personally like dynamic asset allocation funds quite a bit. So with that, I'm going to catch you now on the fourth and the concluding part of this series in my fourth video, where we will address the aggressive investor. I will also take you through a category of funds called multi-asset allocation funds, and in the fourth video I will tell you how you're going to use all the information that we've assimilated through all these videos, the first 3 videos, and how you're going to put that to use to make good decisions. With that, good night, have a nice night, bye.